Good afternoon, ladies and gentlemen. It is indeed a very big pleasure of mine to be here. 2 years ago, I was in India and met with a group of village leaders. These women were poor and illiterate, but despite the fact that they couldn't read or write, they were ambitious, entrepreneurial, and they truly committed and contributed to their communities with their natural talent, their leadership skills. Now, these women, just like you and me, they have aspirations. They want to get security, a roof over their head, food on the table, education for their children, and access to healthcare. But unlike us, these women do not have access to formal financial services. Financial service providers simply do not consider this a profitable segment. So these women are left to use less formal means to achieve their goals. They might use the shopkeeper for some credit, have livestock for savings. Now, if we want meaningful financial inclusion that really makes a difference in these people's lives, we have to better understand their needs and empower them to make financial choices. Now, what do I mean with that? Relevance. Making financial services that are relevant for poor people, that enable them to effectively execute their coping strategies, such as the smoothing of their income or relying on their social networks in times of need. How can we do that? Build trust, empower people to choose and use the services that add value to their lives, that gives them control over their finances. But instead of empowering customers, many financial service providers actually end up disempowering them. They assume that they know what's good for customers, whilst in fact, they underestimate poor people's management skills. And financial service providers often don't get it right. And let me illustrate that with 3 examples. Poor people fear the financial system. Monica, for instance, she's a lady who lives in Kibera in Kenya, and she does the laundry for people to pay her bills. She told me that she went to the bank with 500 Kenyan shillings, which is about $5 US. And she stood in the bank and she noticed that everyone around her was carrying big bundles of money to withdraw or deposit. And so she felt simply out of place and ashamed of being in that bank branch. Poor people also feel that they do not have a choice. Elizabeth is a user of M-Shwari, the digital credit product in Kenya. And she's concerned that if she cannot pay her bills, there's no one to turn to. She can't explain her situation, she can't renegotiate. She basically has no choice and has to take the terms as they come. Poor people also fear losing control over their finances. Adople is a carpenter. He lives just outside of Abidjan, and he recently started using mobile money. He wanted to send $10 US to his family, but he got the wrong number and he didn't get his money back. This money, the $10 US, represented half of his weekly salary. So you can imagine this created serious difficulties for him and his family. Now, because of experiences like these, poor people simply do not trust the financial system. They're not confident that formal financial channels will respond to their needs in the same way that informal means do. Why does this matter? This matters because it has a significant effect on inactivity, dormancy, and that has business costs, right? If we look at the 7 million plus accounts that were opened between 2011 and 2014, we know from research that half of the accounts opened in banks are used less than once a month. 20% remains completely dormant. 63% of the mobile money wallets are used even less than once in 90 days. The main reasons for the fact that these services aren't being used is because poor people don't find them relevant and meaningful in their lives. These services are poorly designed. Financial service providers do not have a sense and a good understanding of what poor people's realities in life are. They don't know what it takes to reduce vulnerability to loss, or to enhance people's stability or increase their incomes. And when they deliver services, they don't adapt to people's context and capabilities. So people end up not using the service. They're simply not able or not willing to engage with the financial service provider. And this matters because also from research, we know that even a 2% increase in your retention of your existing customers can lead to a 10% increase or decrease rather in your operational costs. So that is a compelling business case for better treating your customers and delivering a customer experience that customers appreciate. But financial inclusion is not a numbers game. Don't get me wrong. It's not about the numbers of accounts that have been opened, but it's rather about what is done with those accounts. Because without regular use, there is no benefit, not to the customer nor to the provider. Now, to the financial service providers here in the room, and those of you who are supporting them or investing them, I would say you have the power to design and deliver services that can make a difference in people's lives. You can design them, for instance, by simplifying processes, giving them more choice and control. You can improve your user interface to actually accommodate people's capabilities. And you can facilitate learning by doing and give people tools to shape their own experiences. Empowering customers is about making them able to choose and use the services that they think they need, not that you think they need. So what does it take to create this kind of win-win situation for the customer and the provider? Let me give you two examples, one that relates more to choice and one to control. Choosing an insurance product is about the hardest thing that a poor person can do. It's already hard to sell insurance to someone who lives day by day and has very little means to survival. Card Pioneer Microinsurance in the Philippines identified that challenge as a problem. And they tried to find solutions to get more customers and to retain them, to keep them. They went through an exercise to try and understand what it takes for people to choose insurance services and make the right choices in the various options that were available. They came up with a number of solutions, and the one that I like best, because of its pure simplicity, is called the balloon pitch. A microinsurance agent blows up a balloon that symbolizes the life of a poor person and her loved ones. Then she pinches the balloon and it pops to demonstrate the dramatic effect of a financial shock in someone's life. And then she explains how insurance can actually help in such unexpected circumstances. Now, this pitch was very effective. Why? Because it was very visual and it left a lasting impression. People talked about it. Another solution that Card Pioneer tried out is a menu of options. Rather than a long enrollment form with lots of complicated text, they actually created something really simple, really visual, that illustrates the kind of risks that people can protect themselves against using insurance. And it gives them flexibility. They can choose and make the choice of the kind of insurance products that are most relevant to them. Now, the example of Card Pioneer Microinsurance shows us that more is not necessarily better. If you can, with simple processes and very visual illustrations, get your message across, it's much better for people to make the choice they need to have the services that are most relevant in their lives. Let's now move to India for an example around control. We go to Echo, which is a mobile payment platform that had challenges because of low activity on its platform. Customers were signing up, but not actively using the service for their money management. So what they oftentimes would see is money would come in, and then it would be taken out immediately on the other side. Or people were registering accounts, but they remained inactive. So what Echo did in collaboration with CGAP, they developed an application called Fill the Wallet. And it's an application that actually tries to build on people's existing coping strategies and leverage people's social networks. So instead of creating just another financial product or service, it actually gives people tools to design their own strategies and meet their own goals. And so, for instance, for a domestic worker that wants to have savings goals, she could create a number of saving goals and give them personal meaning, attach a picture to it or a color, depending on the priority or the urgency for her. She can also add a people's lock, which is actually an opportunity for her to give withdrawal approval rights to someone else, like her sister. And that helps her resist the temptation to dip into her savings. The application is also connected to other applications on the smartphone, the address book, the calendar, her Facebook account. So that actually, in times of need, when she needs to reach out to her social network for support, for instance, for an emergency credit, she has all the tools that she needs there and then. Feel the Wallet is actually a tool for people to manage their already very unpredictable financial lives in a better way. It makes life easier for them. It also recognizes that finance is personal, and it gives people control over their finances. Now, what both these examples of Card Pioneer Microinsurance and Echo show is organizations that have understood what it takes to empower customers. They listen to their customers and try to understand what the needs are and also how they can make life easier for them. Then they design solutions based on these insights and organize themselves to deliver in the best possible fashion. And now they're testing and measuring to see how these solutions actually influence their business value. These examples are relatively new in the financial inclusion space, but there are other organizations who've been on this journey for a lot longer. One example is MetLife, a global insurance company that really exemplifies, I think, some of the impact that you can have on customers and business if you take a more customer-centric approach. So MetLife was an organization that was growing okay, but mostly through acquisition, and their retention was terrible. They basically ranked bottom of the pile in terms of customer experience. So something had to be done. So the senior management actually hired a chief customer officer, Claire Burns, and she was in charge of leading a customer-centric transformation. She listened to customers together with her colleagues, and then they organized capabilities to better respond to customer needs. Now, one of the things they did was they re-engineered their entire insurance policies. They created a kind of fast food menu of options. So just like when you go to the Subway and you want to get your sandwich and you have options out of base ingredients and your toppings. And if you would look at all the combinations together, you could probably get to hundreds of sandwiches. And the same is what MetLife did. It gave options to people, but not too much to overwhelm them. And at the same time, it flexibly responded to a variety of needs that different customer segments have. And this was hugely successful. Customers were happier, but also the business gained a lot from that. They managed to get the calls to the customer care center with questions around their enrollment forms down with 75%. Well, imagine the business gain of that. They were also able to financially link a customer experience and retention to business gains. For instance, just in one market, one of their key markets, Japan, they figured that a 1% increase in retention actually resulted to them in $90 million of earnings in one given year. Now, MetLife has been growing tremendously, actually on average 12% in the last couple of years, compared to 3% to their competitors. So I think it is a good example to show that if you do present better or easier choices to your customers and you take a customer-centric approach, you can actually gain business value and customer value at the same time. Customer empowerment is about making financial services a seamless part of poor people's lives. No one gets up in the morning to go to the bank and open an account, but we all have aspirations and needs that require financial services to respond to. So if financial service providers can better understand their customers, customers like the Indian village leaders Monica, Elizabeth, and Adoplay, they can provide more relevant services and have long-term value in these people's lives. Customer empowerment is ultimately about creating and maintaining lasting and valuable relationships that help to build business goals as well as achieve meaningful financial inclusion. Thank you very much.